Hello everyone, welcome back to Satoshi Finance. Today, we embark on an intriguing journey into the world of investments, exploring the timeless allure of precious metals. I'm thrilled to have you here as we delve into the captivating realm of gold, silver, and other cherished metals. Investing in precious metals isn't just about financial gains, it's about tapping into the rich history that these elements hold across diverse cultures. Throughout the ages, precious metals have played pivotal roles in shaping civilizations and economies. From the glimmering gold treasures of ancient Egypt to the coveted silver mines of the Americas, these metals have been integral to human progress. Join me as we uncover the historical tapestry woven by gold and silver, understanding their cultural significance and the lasting impact they've had on societies worldwide. In today's fast-paced financial landscape, the appeal of gold and silver as investment options endures. We'll explore why these metals stand the test of time, serving not only as symbols of wealth and status, but also as steadfast pillars in the ever-evolving world of finance. So, buckle up as we embark on this insightful journey into the pros and cons of investing in precious metals, unraveling the mysteries and opportunities that lie within their gleaming surfaces. Now let's dive into the fundamental essence of precious metals. What exactly are these remarkable elements that have captivated humanity for centuries? Precious metals encompass a select group of metals that hold unique properties, making them highly sought after and revered. Key among these are gold, the epitome of wealth and beauty; silver, the versatile and lustrous metal; platinum, prized for its rarity and resilience; and palladium, a silvery white metal with remarkable catalytic properties. These metals are not merely commodities, they are the building blocks of civilizations, the bedrock of economic systems, and the embodiment of enduring value. The allure of precious metals is rooted in their exceptional characteristics. Their durability, resistance to corrosion, and conductivity are attributes that set them apart. Gold, for instance, doesn't tarnish or corrode, making it an ideal material for crafting intricate jewelry and enduring coins. Silver, with its unmatched electrical conductivity, finds applications in various industries, from electronics to photography. Platinum and palladium, known for their resistance to wear and tear, are often used in catalytic converters, playing a crucial role in reducing emissions from vehicles. Beyond their industrial applications, precious metals adorn our lives in myriad ways. From the ornate jewelry that symbolizes love and commitment to the finely crafted coins that tell stories of nations, these metals bridge the gap between functionality and aesthetic appeal. Now let's shift our focus to the compelling advantages of investing in precious metals, beginning with their historical role as a store of value. Gold, in particular, has stood the test of time as a reliable and enduring reservoir of wealth. Throughout centuries and across diverse cultures, gold has been synonymous with prosperity and stability. From ancient civilizations to modern times, gold has weathered the storms of economic uncertainty, providing a timeless refuge for investors seeking to preserve their wealth. Delving into the historical annals, we find instances where precious metals have proven to be steadfast hedges against economic turmoil. During times of crisis, whether it be economic recessions, political upheavals, or currency devaluations, gold and other precious metals have emerged as beacons of financial security. Investors turn to these metals as a reliable means of safeguarding their assets when traditional investments may falter. The historical narrative is peppered with examples of individuals and nations turning to precious metals during turbulent times, highlighting their enduring role as a hedge against the ebb and flow of economic uncertainties. Now let's turn our attention to another compelling aspect of investing in precious metals: the crucial role they play in portfolio diversification. Diversifying one's investment portfolio is a fundamental strategy to mitigate risk and enhance overall stability. Precious metals, with their unique characteristics and market dynamics, offer investors an attractive avenue to achieve this diversification. The intrinsic value of precious metals lies not only in their wealth preservation qualities, but also in their ability to act independently of traditional assets. In times of economic uncertainty or market volatility, precious metals often exhibit a low correlation with stocks and bonds. This means that while the value of stocks and bonds may fluctuate based on economic conditions, the value of precious metals may remain relatively stable or even increase. This low correlation provides a valuable buffer, helping to shield an investment portfolio from the full impact of market fluctuations. Let's now explore the intriguing role of precious metals as a hedge against inflation, a characteristic that has long contributed to their appeal among astute investors. Inflation, the gradual increase in the general price level of goods and services, erodes the purchasing power of currency over time. Precious metals, particularly gold and silver, have historically been perceived as a reliable safeguard against the corrosive effects of inflation on wealth. The rationale behind this lies in the intrinsic value of precious metals and their limited supply. Unlike fiat currencies that can be printed at will, the production of precious metals is constrained by geological and mining factors, contributing to their scarcity. As a result, when inflation accelerates and the value of traditional currencies declines, the value of precious metals often experiences an upward trajectory. Throughout history, there are numerous instances where precious metals have retained their value during inflationary periods. A classic example is the inflationary crisis of the 1970s, where gold, in particular, soared in value as a response to rising inflation rates. Investors turned to gold as a store of value and a hedge against the diminishing purchasing power of fiat currencies. By examining such historical episodes, we gain valuable insights into the resilience of precious metals as a reliable hedge during times of economic turbulence. Now let's shine a spotlight on the global demand for precious metals, a force propelled by the intricate dance between tradition, industry, and the dynamics of emerging economies. Precious metals have transcended borders and cultures, captivating the collective imagination and asserting their universal allure. While their historical significance remains steadfast, the modern era has witnessed a surge in global demand, with emerging economies playing a pivotal role in driving this hunger for gold and silver. Emerging economies, characterized by rapid industrialization and a burgeoning middle class, have become major players in the global demand for precious metals. As these economies experience robust growth, there is an increasing appetite for luxury goods, including jewelry and other items crafted from gold and silver. These metals, revered for their cultural and symbolic importance, find a new dimension as status symbols and expressions of prosperity in these emerging markets. Moreover, the role of gold extends beyond adornment in emerging economies. Gold is often considered a reliable form of savings and investment, serving as a store of value in regions where economic uncertainties may be more pronounced. As a result, the demand for gold in countries like China and India has soared in recent years, contributing significantly to the global demand landscape. In the world of intangible financial instruments and digital transactions, the allure of tangible assets, particularly gold and silver, stands out as a testament to the enduring human desire for something palpable and concrete. The appeal of holding physical precious metals goes beyond their monetary value. It's deeply rooted in the tangible nature of these assets. Unlike stocks, bonds, or digital currencies, gold and silver exist in the physical realm, possessing a weight, sheen, and touch that evoke a sense of permanence and authenticity. The tangible nature of gold and silver serves as a powerful draw for investors seeking a more visceral connection to their wealth. Owning physical precious metals provides a sense of security and ownership that transcends the abstract world of financial markets. In times of economic uncertainty or crises, the tangible presence of gold and silver can offer a reassuring anchor, a physical representation of wealth that is immune to the fluctuations of virtual markets. Furthermore, the tangible aspect of precious metals fosters a unique emotional connection. Holding a gold coin or a silver bar in one's hand is a tangible reminder of wealth and stability. This physicality enhances the psychological impact of ownership, creating a sense of reassurance and control over one's financial destiny. As we navigate the landscape of investing in precious metals, it's imperative to shine a light on the flip side of the coin, the challenges and drawbacks that investors may encounter. One prominent concern is the inherent volatility associated with precious metal prices. While gold, silver, and other precious metals have long been regarded as stable assets, their values are not immune to market fluctuations. The prices of these metals can experience sharp and unpredictable swings, creating both opportunities and risks for investors. Geopolitical events and market sentiment play pivotal roles in driving the volatility of precious metal prices. Global political tensions, economic uncertainties, and shifts in market sentiment can trigger significant price movements. For example, geopolitical events such as trade tensions, wars, or economic sanctions can lead to sudden spikes or declines in precious metal prices as investors seek havens or respond to changing market dynamics. Similarly, fluctuations in market sentiment, influenced by factors like interest rates or inflation expectations, can contribute to rapid and sometimes irrational movements in the prices of gold and silver. While the luster of precious metals shines brightly in the world of wealth preservation, it is essential to acknowledge a key limitation: the absence of income generation. Unlike certain investments such as stocks or bonds that provide a regular stream of income through dividends or interest payments, precious metals are passive assets that do not inherently generate cash flow. Investors who seek regular income in the form of dividends or interest may find this aspect of precious metal investing less appealing. The lack of income generation from precious metals is a fundamental distinction that sets them apart from income-generating assets. Stocks, for instance, often offer dividends, which are periodic payouts from a company's earnings to its shareholders. Bonds, on the other hand, provide interest payments to bondholders. These income streams can contribute to a steady cash flow for investors, serving both as a source of income and a potential cushion during market downturns. As we explore the world of investing in physical precious metals, it's crucial to confront the practical challenges associated with their storage and security. Unlike digital assets or financial instruments that exist in virtual spaces, physical gold, silver, and other precious metals demand a tangible and secure physical space. One significant consideration for investors is the need for proper storage facilities to safeguard their valuable holdings. Storing physical precious metals poses a challenge due to their tangible and often sizable nature. Investors must grapple with questions of security and accessibility. Many choose the convenience of home safes, providing immediate access to their holdings. However, this option comes with its own set of considerations, such as the risk of theft, natural disasters, or the need for insurance coverage. On the other hand, opting for bank vaults offers a heightened level of security, leveraging the sophisticated infrastructure of financial institutions to protect valuable assets. This route, however, may involve additional costs and limitations on accessibility. For those seeking a balance between convenience and security, third-party storage facilities emerge as a viable option. Specialized storage services offer secure vaults, often located in strategic locations, providing a professional solution for safeguarding precious metals. While these services may come with fees, they alleviate the concerns associated with home storage and offer peace of mind to investors who prioritize the safety of their tangible assets. As we continue our exploration into the world of investing in precious metals, it is crucial to shed light on the element of market speculation inherent in these markets. The precious metal markets, particularly those of gold and silver, are known for their speculative nature. Price movements can be influenced by a myriad of factors, ranging from economic indicators and geopolitical events to shifts in investor sentiment. It's essential for viewers to understand that these market dynamics can lead to short-term trends that may not necessarily align with the long-term fundamentals of the precious metals. The speculative nature of precious metal markets means that prices can experience rapid and sometimes unpredictable fluctuations. Investors who are swayed by short-term trends without a solid investment strategy may find themselves exposed to increased risks. Market speculation can create a volatile environment where prices may be driven more by perception and sentiment than by the intrinsic value of the metals. Now that we've explored the nuances of investing in precious metals, let's shift our focus to the practical realm of implementation. In this section, we will be dedicated to elucidating the various types of precious metal investments, starting with the tangible allure of physical metals. For investors seeking a hands-on approach to wealth preservation, the option of buying and holding physical gold and silver holds undeniable appeal. Investing in physical metals involves acquiring actual coins, bars, or other tangible forms of precious metals. The weight, purity, and storage considerations become pivotal factors for investors navigating this path. Purity is a crucial metric, with higher purity metals often carrying greater value. Weight, typically measured in troy ounces, determines the overall quantity of precious metal in the investment. Storage considerations range from home safes, offering immediate accessibility but necessitating security measures, to secure third-party storage options that provide professional security solutions for a fee. Moving forward in our exploration of precious metal investments, we encounter the dynamic realm of exchange-traded funds, ETFs, and mutual funds, presenting a more accessible avenue for investors to gain exposure to the shimmering world of gold, silver, and other precious metals. These financial instruments offer a diversified approach, allowing investors to indirectly invest in precious metals without physically owning the assets. Exchange-traded funds, ETFs, are investment funds traded on stock exchanges, and they track the performance of a particular index, commodity, or basket of assets. Precious metal ETFs are designed to mirror the price movements of the underlying metals, providing investors with a convenient and cost-effective way to participate in the precious metals market. Similarly, mutual funds pool money from multiple investors to invest in a diversified portfolio, including precious metal assets. Both ETFs and mutual funds offer the advantage of diversification, spreading risk across various assets within the fund. One notable benefit of investing in precious metal ETFs and mutual funds is the liquidity they provide. Being traded on stock exchanges, ETFs offer the flexibility of buying and selling shares throughout the trading day at market prices. This liquidity ensures that investors can enter or exit positions with relative ease. Additionally, the simplicity and ease of trading associated with ETFs and mutual funds make them attractive options for those seeking exposure to precious metals without the complexities of directly managing physical assets. As we continue our exploration of precious metal investment options, another avenue that beckons investors is the intriguing world of mining stocks. Investing in mining stocks offers a unique perspective, allowing individuals to indirectly participate in the precious metals market by becoming stakeholders in companies engaged in the extraction and production of gold, silver, and other valuable metals. Mining stocks represent shares in companies that explore, develop, and extract precious metals from mines. These companies range from established giants with extensive operations to smaller, more specialized firms. Investing in mining stocks offers the potential for capital appreciation driven by the performance of the underlying metals. However, it's essential for investors to recognize the dynamic nature of this sector, as mining stocks can be influenced by various factors beyond just metal prices, including operational efficiency, geopolitical considerations, and exploration success. One distinctive aspect of investing in mining stocks is the correlation between the stocks and the prices of the metals they extract. Generally, mining stocks exhibit a positive correlation with metal prices, meaning that as the prices of precious metals rise, the value of mining stocks may also experience an upward trend. This relationship underscores the direct impact that metal prices can have on the profitability and valuation of mining companies. As we near the conclusion of our journey into the world of investing in precious metals, let's recap the key insights that have illuminated this exploration. We embarked on a fascinating odyssey, unraveling the historical significance of precious metals, their unique properties, and the diverse roles they play in various cultures and industries. Throughout this voyage, we delved into the pros and cons of investing in these timeless assets, considering their historical store of value, diversification benefits, role as an inflation hedge, and the tangible allure they bring to portfolios. In summary, the allure of precious metals lies in their ability to provide stability and diversification to investment portfolios, serving as a hedge against economic uncertainties. However, we've also navigated the potential challenges, including volatility, the absence of income generation, storage considerations, and the speculative nature of precious metal markets. Each aspect carries its own set of considerations that investors must weigh against their financial goals and risk tolerance. As we conclude, I encourage you, dear viewers, to reflect on the information presented and carefully consider how investing in precious metals aligns with your unique investment objectives. Whether you are drawn to the tangible security of physical metals, the accessibility of ETFs and mutual funds, or the potential for growth in mining stocks, the choices are varied and nuanced. Remember that a well-informed investment strategy, tailored to your individual circumstances, is the key to navigating the complexities of the precious metals market. Thank you for joining me on this illuminating journey, and may your investment endeavors be as enduring and resilient as the precious metals themselves.